So Micron just had their Q1 2019 earnings report, and if you paid attention to the stock price after hours, it experienced some major volatility. Now, I'm going to be going over in this video pretty much the key takeaways from their earnings report and then giving my perception on those key takeaways. And I think that'll shed some light onto exactly why there was such immense volatility in the stock price. And then I'm also going to talk about, my viewpoints on the company and the stock price moving forward and how that fits into my investing strategy. What's going on, guys? If you're joining me for the first time, my name is Dan and this is Millennial Investing. And this channel is pretty much a documentation of my investment journey where I go over my thoughts on investments, personal finance, and overall economics that are going on in the world at any given point in time and kind of sharing my thoughts on them. So if you're interested in any of those topics, make sure to hit that like button and hit that subscribe button. And without further ado, let's get into the video. Now, if you guys are interested in reading about any of these numbers that I'm about to be going over, I'll make sure to link in the description below to Micron's investor relations page where this presentation, where the majority of this information is getting pulled from, is there, so that way you can check out the information for yourself. But getting into it, so on EPS standards, Micron beat on a non-GAAP basis and missed on a GAAP basis. In essence, neither the beat or the miss were that substantial, so I do not really care. I essentially view this as flat overall to what the majority of analysts were expecting. I'm not too upset with what's been going on, and especially with how pessimistic and how volatile Micron has been over the past couple of months. I definitely don't think that any relatively inline earnings is cause for alarm. Now, looking at the company's revenue, it did come in at just under $8 billion, and that represented roughly a 16% year-over-year growth, but that did miss analysts' expectation by roughly $90 million. And granted, when you're dealing with $8 billion and you miss by $90 million, in all honesty, in my opinion, that is not that big of a miss. However, analysts were expecting a little bit more out of the company. Now, looking at the company's buyback program, and this is something that I found very interesting personally, roughly out of the $10 billion that they set aside and dedicated to share repurchases over the next year, they've only used $1.8 billion of that. So that means that they have only bought 42 million shares approximately, and doing out that math and how much money they actually spent, their average price per share came in at roughly $42.85. Now, if you look at the current price at the time of this video, it is about $31.56, and that equates to about a 26% loss, or the company just lost on their investment on themselves, if you want to look at it that way, roughly $11 million. Now, this is something that I'll get into later, but I'm actually kind of pleased with the fact that they are only roughly 18% of the way done with their share repurchase, because I believe the stock price will be going down, over the short term, say 1 or 2 years from now, and I think that the company can buy their shares at a much lower price. Now, just taking a quick look at their other financials, their free cash flow for the quarter came in at roughly $2.3 billion, and that actually surprised what I was expecting with the company. I was expecting it to be in the high $1.8 billion or a low $2 billion range, and so the fact that it kind of beat that is a pleasant surprise on my end. Their total debt was, again, a focus on the company's balance sheet, because now Sanjay has pretty much kind of devoted over the past couple of quarters to really paying off that debt. So they paid down it again another roughly 11% in the quarter, which is something that if you guys have been following the channel, you know that I do not like debt on a company's balance sheet, especially at this stage of the economic cycle. So that was something that was a big bonus to me. And overall, their gross margins are holding up pretty strong at sitting anywhere between 50 and 53%. Now, getting into the thing that really drove the company's after price movement was definitely the guidance that was provided by the CEO and the CFO. And for, what it is, I definitely think that this was all relatively in line with what we had expected, at least here on the channel. And just going over quick with what were the main key points that I thought the CFO and CEO kind of alluded to was that, first off, that DRAM outlook had been lowered from 20% over year for next year down to about 16%. And that was mainly due to slow mobile demand, as you can see with, say, the iPhones and other smartphone sales decline over the past year. You can see that there is a slowdown in cloud computing growth, and the data center and cloud computing institutional growth has slowed down, and that's kind of because of a digestive period. Now, that's kind of focused around companies that have really been focused on ramping up their data centers and really, converting all of their information onto cloud. They kind of view it as, okay, a lot of companies now have been moving so much information onto the cloud, their businesses still need to catch up to now dealing with that new infrastructure. So it'll be interesting to see how long that, kind of persists, but it is one of the main reasons why they believe DRAM demand is going to be down in the next year. Now, looking at what the company did with their CapEx, or capital expenditure, they actually reduced the amount of money that they were going to be spending by about $1.25 billion, and that is mainly due to the fact that the company has now acknowledged that the industry is slowing down and they need to reduce CapEx because they want to maintain their strong balance sheet and they want to keep in line with what's going on with the other key players in this industry, mainly looking at Samsung and SK Hynix. And the last big takeaway that the CEO kind of reminded investors that is going to continue to be a thorn in their side is that the CPU shortage is still strong and it is still persisting and should persist over the next couple of quarters. So you can see that they stated that key customers, have not returned to buying in bulk as they were, mainly due to the fact that they were waiting on, new server CPUs to really revamp the whole data center. And oversupply issues do not expect to really resolve over the next couple of quarters until the second half of 2019, maybe even the end of 2019. Now, this was pointed out in their last earnings call, kind of pointing at companies that were not supplying sufficient CPUs for data centers are kind of bogging down the entire industry because companies can no longer innovate at the speed that they once were. Now, I'm going to be going through my key takeaways from this earnings report, and I'm going to be relating it to what my assumptions were from the Q4 earnings report a couple months ago, and kind of how that affected, and the results from this earnings report affected my investment philosophy and my investment strategy in Micron. So, as a recap, and you can check out the video in the description, or I'll put a card up here of what I went over when I gave my update on Micron. The main takeaways that I had from that earnings report was that I was worried about the amount of CapEx that they were spending because I wanted them to focus more on debt at this stage in the economic cycle. I wanted to know how the buyback was going because the way that the company kind of alluded to the buyback when they first introduced it was that it was going to be an aggressive, accelerated buyback program. And I thought that they were going to be buying the bulk of their shares in the first couple of quarters of this year. And I didn't really think that, while I did think that the stock prices were cheap, I thought that as, looking out, 5-10 years from now, I thought that the company could really kind of hold off on repurchasing the bulk of these shares until the stock price either one, took a massive tank due to, industry-related issues, or, possibly over the next couple of years, if the overall economic conditions, across the board kind of worsen, I definitely think that there are going to be better prices for Micron, in the next couple of years. And I wanted them to kind of, ease up on how quickly they were going to be buying those shares. Next, I talked about that I was afraid of the CPU shortage that could potentially and continuously slow down Micron and other semiconductor companies in this space. And I was not expecting Micron to really, kind of wow anybody with their accelerated growth until after this issue was put behind us. And finally, I was anticipating that GDDR6 was going to be, relatively lackluster or even negative because I believed that due to NVIDIA's RTX kind of demand and how those graphics cards were really getting played out, I thought that the company would be losing money on that end. So now, after this earnings report, let's kind of take a look at what I just kind of went over and see where I was right, where I was wrong, and kind of what my opinion is now on the company. So, running down the list, reduced CapEx and focused on deleveraging. So this is exactly what I wanted the company to do. I didn't think they needed to aggressively expand right now when everybody else in the space was kind of contracting. Micron is still, kind of more aggressive than the rest of the companies in this space, and which is something I like to see, but I did want to focus on getting rid of debt now while interest rates are relatively low, and I want to make sure that the company, is in a good financial standing, assuming that we go for, more turbulent times in the overall economy. Now, the buyback was also not nearly as accelerated as the company led on in their last earnings report, and this was a pleasant surprise to me. I definitely think that there are going to be better prices for Micron, say over the next couple of months or even over the next couple of years. And the fact that they're only 18% of the way done with their buyback is something that I definitely wanted to hear, as a long-term Micron shareholder and someone that believes in the company over the long term. I believe that they're going to be able to return a lot more equity to shareholders, assuming that they were able to slow down and really strategically buy shares at a drastic discount in the future. And one point that I was dead wrong on was that I thought GDDR volume was going to be going down, and it actually started to finally ramp up. And so this kind of alludes me to believe that, okay, possibly the RTX cards either purchased by NVIDIA or the amount of, autonomous vehicles that are going to be relying on Micron to, supply RAM to these individual projects is actually ramping up faster than I expected. So that's something that I am pleasantly surprised at, I guess, but it wasn't at an immense level that I thought was going to be anything that would really change my overall opinion, in that regard, because it was a slight increase in volume. it wasn't, say, massive growth year over year, and I'm not really expecting any more growth out of this segment. So overall, looking back at this earnings report, it realistically has not affected my strategy or my, my thesis about investing in Micron at all. I still believe that Micron will be kind of dwindling down over the next couple of quarters, and it's going to be mainly focused on the CPU update with Intel and AMD and how those customers and how those products are coming along, and what is the demand going to actually be. Now, I definitely see that, over the long term, I see data centers growing, I see cloud computing growing, and I see so many explosive growth vectors for Micron, in these spaces that are just kind of emerging. However, they need a catalyst in order for that to reflect in the stock price. So essentially now what I'm doing is I'm waiting for Micron to really hit book value before I start buying more shares. And then once it dips below book value on a percentage basis, I will be slowly accumulating even more shares. Now, if you look at, say, over the past, when in 2015, I believe, Micron was trading at roughly 0.8% of its book value. And I expect that, assuming we do not hit a recession or any other, global economic situations happen that is out of the company's control, I believe that this is around the bottom for the stock, assuming that this is just like every other semiconductor cycle. Now, if we hit a recession and it's something that completely all bets are off for the semiconductor space, I definitely think that if the semiconductor space goes through a recession, it will get hit significantly harder than the overall market, and it will even get hit harder than, say, just the tech sector in general, because semiconductors are essentially, the only thing that gets used when the company is growing, and it is one of the first things that gets cut, at least development into it when the economy starts to slow down. So overall, my investment thesis is still relatively solid, and I'm waiting on more information to come out of the company and, kind of the overall factors relating to China and the trade war. I do think that things are going in the right way, at least looking, say, at a 5 to 10 year time horizon for Micron. But in the short term, I'm still just kind of waiting and really looking for a more attractive level to accumulate more shares. So that's it for this video. Let me know what you guys think down in the comment section below. Are you still a Micron shareholder? Are you thinking about buying it now? Do you believe that Micron, deserves to continue to go down and you're going to say probably short the stock? Let me know, and let me know what other stocks you're really interested into, all the volatility that's going on in the markets. I'd love to hear what you guys have to say. And thank you guys again for watching, and I'll catch you guys in the next video. Peace.